Bruce Maluish, Managing Director of VRX Silica, a West Australian-based ASX-listed silica sand company, exploration at this point, but heading into production.
Bruce, good to have you on the show, and thanks for coming on, because I think there's been a few calls for us to talk to silica sands companies, but most people don't actually know what it is and what it's used for. So might use the first beginning a bit of this conversation, if you don't mind, just kind of educate the audience a little bit. So silica sands, what is the market for it? What's it used for? Where does it come from? Who are the players?
Well, it's the most used commodity on the planet after air and water. 49.5 billion goes into concrete. And therein lies the problem, because predominantly in Asia at the moment, all the stimulus spending, which is a significant amount, is going to concrete. And they require silica sand. It makes up about 30-40% of concrete. Now, glass manufacturing is the next largest user of silica sand. And the glass manufacturers are increasingly finding it more difficult to access the quality sand that they require to make glass. Now, you might say the world's full of sand, down the beach, Sahara Desert, but none of those sands are actually suitable for making either concrete or, in fact, can be upgraded to the quality that's required for glass making. So desert sands tend to be round, and they're an orangey red colour. That's because of the amount of iron that's in them. And they're rounded off, so they're not suitable for making concrete. So those two industries are competing often for the same source of material. And also, the better quality sand in Asia is being dredged from rivers and lakes, which is unsustainable. And they're finding it increasingly more difficult, governments are making it more difficult for them to access that type of sand. So we've tried to position the company where in the near future we can start supplying high quality sand into the glass making industry and also the foundry industry. That's also quite a large user of quite specific quality sand, which we happen to have, and particularly in Korea, which is the largest foundry industry in the world. But glass making, it's, Asia produces, or China produces 46% of the world's glass. Now, that's made up of flat glass, which includes automobile glass. And I don't care whether you're driving a piston engine car or an electric car, same amount of glass in there. So flat glass includes the automobile industry, but container glass, it's also a huge industry. Each of them use about 65 million tonnes a year of good quality sand, growing at 5 to 6% per year. We're looking to set up 3 to 4 projects of about 2 million tonnes each per year.
Right. So the size of the market in dollar terms, so people can sort of understand the opportunity in front of you, would be what?
It's very difficult to put a price on silica sand, because a subtle change in the quality will determine which market it goes into. But it's not like iron ore or anything like that. But you're going to get sort of $50-$60 for the lower quality stuff and sort of $70-$80 for the higher quality material. But that's I suspect that will change in the near future, because it is becoming more and more difficult to find that quality sand in Asia. Every Asian country now has banned exports of silica sand. Each country is acutely concerned about their own domestic supply, now particularly for concrete, but all the Asian countries have got quite large either foundry industry or glass-making industries. And the capital that's tied up in each of those industries is very significant, but if you don't have the raw materials, it's a lot of capital sitting around potentially not doing much.
It is, but what I'm trying to get at is the size of the opportunity in front of you, your company, in the sense of, right, do we understand the total size of the market out there, where you're aiming for in terms of those different, qualities of sands, and, into which jurisdictions are you hoping to sell, whether it be glass or concrete?
We're not looking at the concrete market. It's really glass making.
Okay.
Glass making in Korea, Japan, Philippines, Thailand, Malaysia, and also the foundry industry in Korea. At the moment, we've got enough interest from those countries to not include China, but ultimately we'll be selling into China eventually. But we're looking to put in offtake agreements with non-Chinese companies for the moment to assist us in getting final financing to develop these projects. But we have an enormous amount of interest, far in excess of what we can produce. But one of our projects, this project behind me, is Arrowsmith North. Now, it can produce a product which will run about 99.7% silica dioxide and about 500 ppm iron. Now, that'll go in the flat glass industry and the container glass industry. One of our other projects is Muchea, which is just outside of Perth. We could produce 99.9%. Now, it doesn't seem like much, 99.7 to 99.9, but it is quite significant. But more significant is we can produce it at about less than 100 ppm iron. So that will go into the ultra clear market. Now, the leading product in the ultra clear market is the piece of glass that goes over solar panels. Now, it's actually very high-tech glass that is required there. Not only is it ultra clear, because you don't want to diffract any sunlight because that equals power, but it has to withstand hail. So that is every glass manufacturer wants to be making that type of glass because it's such a huge market, and it's growing at 30% per year. So it's and you can well imagine all the demands going on now for solar panels is growing exponentially, and who knows where all that'll end up. But the difficulty in trying to make that type of glass is getting the right type of sand. You need 99.9% to make ultra clear glass. Now, we fit right into that market.
Okay, let's try and get back to basics. So you've got Arrowsmith and right now, Arrowsmith North is the thing that you're looking at. So have you done, what studies have been done on that? I know we'll talk about the kind of environmental and the green aspect in a minute and the way that you're going about doing it. But just in terms of numbers, what do the economics on that look like?
We're looking at a margin of about 20 Australian dollars per tonne FOB. So that's free on board onto the ship. And that's to mine it, process it, transport it, and also load it onto the ship. So it's a reasonable margin, but we also think it's a margin that is going to increase over the next few years. And we're looking to put in a plant of production of about 2 million tonnes per year. Now, we also have Arrowsmith Central, which is nearby, and we have Muchea, and we have another project down there, Esperance, that's in very early stages. But really, our schedule here is to get Arrowsmith North up and running, and then Muchea up and running. Now, the timetable for these will be entirely dependent on the EPA, but we've been dealing with them for a number of years now. We now understand the studies that are required to get the assessment undertaken on this type of country. Now, this country behind me, it's called Crongan Heath. Mm-hmm. It's quite shallow. And the root systems on it, as you can imagine, this is loose sand. The root systems are also very shallow. So we've developed a rehabilitation technique here whereby we've got a modified front-end loader, and it takes out a 3 metre by 3 metre by 400 millimetre deep sod, and we can lop all this off below the root system. So we're picking them up and transplanting it, and we transplant it back immediately to where we've just been mining. So there's initial cleared area, but after that it is relocation, and it's called vegetation direct transfer. We think it's been tested before in the area in this type of vegetation, so we understand how it works and how effective it is, and it's vastly better than any other rehabilitation techniques.
Yeah, and there's a good video on your website about that, which we'll probably put a link to, because it shows and demonstrates quite nicely, the process there. But look, Bruce, let me come back to the economics, because I'm trying to understand the scale of the opportunity in front of us as investors, right? So currently $20 per ton, obviously, as you say, as the market is depleting, you think going forward that margins should increase, but so may costs. We don't know what's happening with supply chains and inflation and so forth. So how many tons are we talking about putting through the plant? You mentioned sort of, what was it, 200?
2 million.
2 million tons per year. What's the capex on that? I'm trying to work out what the IRRs are and the returns are on that project.
45 million Australia.
Okay. So not crazy. Fine.
No, it's cheap capex. It's very cheap to run. Uses very little power, and it's washing and screening. We've actually developed a new technique using some flotation to remove the last little bits of the impurities.
Right.
But the margin at Muchea is about twice that.
Right. And just talk about, because obviously I've seen the videos and I've seen the scrubland, and it's vast. But in terms of the drilling and working out what's where, etc. Like what's the extent of this land package that you've got in terms of being able to deliver the silica sand that you were looking for, the type that you're looking for? And what's the life of mine?
Arrowsmith North, about 100 years.
Oh, that should do it.
We've got over 1 billion tonne in resources. We're not going to run out of sand.
Okay, so that's the good news.
So these are extremely long life projects. Now, strangely enough, in the world of glass manufacturing, silica sand contracts, 3 years, 5 years is regarded as extremely long term. We can sign up for much longer than that, and it's a fairly unique position whereby. These are very, very long life, and they're enormous resources. This one behind me is a sand dune. We're not digging a hole here. We're knocking the top off a sand dune. So this dune here is about 12 kilometres long, 4 kilometres wide, and 15 metres high.
Right.
So it's an enormous resource.
So there's enough of it. It's easy to get at. It's cheap to mine. The capex is low, and that's just one project we're talking about. You've got three others at various stages, which I guess we can talk about in a second. But let's use assume there's a kind of cookie cutter approach to this. So let's focus on Arrowsmith. So you've described a process which says, okay, we are making sure that we are looking after the flora and fauna. We're meeting all the I guess there's quite a few hoops to jump through in terms of the environmental. So I know it's a very long list of
it's not
requirements.
A particularly long list. No, it's not a particularly long list, and it's a process that you can work through.
Right.
We've done about 16 different types of studies on this particular project. Anything from obviously the flora, fauna, invertebrates, air quality reports, emissions studies. There's a vast number of them. And it's been a process we've been working through with the EPA, because they've never been presented with a project of this magnitude. So, it's been a learning process for the EPA as well. But we deliberately selected this particular area because it's a bit more remote, it's less contentious, and it allows us to do this rehab VDT technique. Now we know the studies that are required to undertake the assessment on the other projects as well. Now we've done the studies. Each time we did a study on this project, we repeated it at the other ones, so they're ready to go. We've already lodged the first part of documentation for Arrowsmith Central, and we're about to lodge the starting process for Muchea. But we've got all the studies ready to go, and the EPA is getting more comfortable in dealing not only with us, but this whole process. So we've our strategy here is to get this one in and approved and follow it up with the other ones. And they should move a lot quicker.
Right. Okay.
There's no doubt it's dragged out. COVID didn't help, but it didn't affect us terribly. But really, it's been a process of engaging with the EPA and moving with them through the assessment process.
Right. And so how long have you been at this?
2.5 years.
Okay, so 2.5 years, but you feel that you've kind of been through, well, jump through the hoops, as it were, and try to work with the EPA, trying to understand how this can be best done, and then hopefully a cookie cutter approach on the rest. So back to the project at hand at Arrowsmith, which is just in terms of IRR, return on this, is looking like what? I'm trying to understand the economics.
Yeah. 80%.
80%. Okay, so everyone should feel very comfortable with that.
The payback is about 2.5 years.
Right. Okay. Very, very comfortable. So it seems like that side of things, great. So now route to market. You're telling me Japan, Korea, and possibly even eventually China is the market for you. How do you go about getting contracts in place? Is there a kind of terminal market for this thing? How's it work?
There's nothing like the LME in the sand market. You have to approach each of these companies.
Right.
We've got letters of interest from 65 companies that are prepared to buy these products. 45 are from China. Our marketing manager, he's Korean. He's based in KL. He's been in the silica sand market for 17 years. He knows all the players we need to be talking to. And in fact, he has been extremely helpful in directing us to produce the right product. So he has been able to identify markets that we should be targeting, which we have. And in fact, at lab scale, we've been able to produce samples, and we've sent them to, we've really got targeted about 20 companies. And we've sent them 1 kilo and 5 kilo samples, and they've all said, great product, we're more than happy to do it, need a bigger one. And they all need 50, 60 kilos, which is not very difficult to produce at lab scale. So we've actually built a pilot plant where we can do a ton at a time. And we have done that, and we have sent out larger samples to them, to a number of players. We've got another ton being processed now, which will also get distributed. And then we'll go back and talk to them, and we'll talk, about offtake. We've already signed up a couple of non-binding offtake agreements with some Korean foundry guys who they're not huge. It's a couple of 100,000 tonne a year, but they've also said if it fits our bill and it all works out okay, they want 500,000 tonnes a year each. So it's a classic industrial mineral. More often than not, you have to get it into the market to develop the market. So we get companies even now, and we're not in production. They say, we like your tech sheets, we like the sample, send 50,000 tonnes. Bit difficult. So,
okay, but so how does this follow sort of the sort of traditional pattern of lab, pilot, demo, and then full commercial plant? Or can you skip the demo plant component, given the simplicity of the processing? I'm trying to work out, can you save costs?
We were comfortable with lab scale.
Okay.
We're more comfortable now with the bulk sampling. It's not complex.
Right. I think that's my point. It's not complex. It's high margin and relative low capex. You're saying the interest is there. It's a question of I guess selecting who you want to work with, or going with the highest bidder, or again on that side of things, the competitor, given the demand and the marketplace. How has the price of the VRX Silica products that you produce, has that moved much? Was it small, steady growth?
It moves between 5 and 10% per year.
Well, up or down, or up and down?
Ultra clear glass has probably jumped about 20%.
Okay. Over what? I'm trying to understand over what period. Is this a slow, steady growth component?
Over the last couple of years.
Right, and how do you know that's kind of permanent?
A lot of the Sorry?
How do you know it's permanent, as in, that it won't kind of drop off a cliff at some point? What's
There's no new supply coming onto the market.
Okay.
It's not like they've got a choice. If you've got reducing supply in every Asian country, the glass manufacturers have to get their sand from somewhere. Now, the alternative is you take hard rock, you crush it, grind it, and then produce almost a sand flour, and that's very expensive exercise. So that's really our the top is that market there. But also that's getting more and more difficult. Where most of China used to access high-grade silica sand by taking not so good silica sand and pickling it in acid. So it was acid-washed material. And then there used to be nearly 500 companies in China that would do that. And they were feeding into the silica sand, the glass market. But the disposal of the acids at the end was becoming problematic, and most of them were closed down. So only the ones who have got good environmental controls in there over the disposal of their waste are still existing, and it's down to about 50 companies. So that source for higher grade silica sand is also diminishing. So this is where we're trying to position ourselves to be in the right place, right time, right product.
Okay, so let me talk about the products, because I'm trying to understand the margins and the opportunity ahead of you again at all times. Which is, you talked about the lower end product being $50 a ton, and then the higher end 70, 75 bucks. Are you in control in any way of the product that you can output by affecting the way that it's processed? Can you create more of the higher and higher margin product, or is it a case of whatever comes out of the ground is what you get?
To a certain extent, but it certainly depends on the raw material that you start off with.
Right.
These are all granite derived deposits, and in fact, in this photo behind me, in the distance, you see a range of hills there. They're actually granite hills. So this is eroded from those hills. Now, the granite is not consistent along the length of those hills. So you could move 50 kilometres away and get a quite different type of sand. As it happens, our sand near Perth at Muchea is good quality. It's 99.7% in the ground. So processing that up to 99.9 is not too difficult. Same as we're taking this here, and it's about 98.5. We can process this up to 99.7. Once again, the same technique will be at all of our projects at the moment. What we have found is our process circuit is adaptable to each of these projects, and will maximise the quality we can get out of there. But you can't, without going down the route of acid washing, we can't get it any higher than what we're producing.
Right. Okay. And with regards to the purification process itself, you're saying that's not that expensive, but or complicated, certainly, and by the sounds of it, not that expensive either. Are there new market? The current market? You mentioned one of them, obviously. Vehicles, right? Whether it's internal combustion or electric vehicles, you don't care. It's still used. Your product's still used in all of those cars. I mean, are there new sectors coming through which have a sort of, you need this kind of higher purity, this higher quality product coming through, which you can direct yourself towards? Or is it just a case of you just need an offtake agreement or some prepay agreement or whatever structure of agreement by these potential strategic partners of yours, you don't care what they do with it? I mean, I'm trying to wait. How do you improve your margins? Can you affect that?
Yep. Yes, there are downstream opportunities to improve the quality, but the markets you can go into there are nowhere near the same tonnage. We could get into the silicon gel market. It's about 60 odd thousand tons a year. Paint, flour. If you go and grind this and process it a bit more and produce flour, it goes into paints. It's sort of 10 million tons a year. The markets are nowhere near as big as flat glass and container glass.
Right.
But you can start adding a significant value. Now, we can produce at Muchea 99.9, in fact, about 99.95. That's regarded as a 3N sand. If we process it a little bit, and it's worth about $70 a ton. If we get to 4 nines, it's worth about $300 a ton. If we go to 5 nines, it's worth $3,000 a tonne. Now, saying it makes a lot of sense, but it's not easy to do. And there are plenty of companies around the world that do that. They will buy sand, they will grind it, they will, chlorine wash it, get it up to a high product and sell it into the market. Now you're talking LCDs, the thin film on the front of your monitor, the glass that goes on the front of your phone. There are enormous number of products that use silica sand. You are completely surrounded by silica sand all the time. The lights, the lights behind you, the light globe, the neon tube, very highly sophisticated technology that produce a neon tube. You get into fiber optics, it's glass fiber glass, for windmill blades. Windmill blades are an aluminium frame with a fiberglass coating on it. It's very high tech, and there's lots of companies already established in that market, but all those markets are growing like crazy. You can't make enough LCDs at the moment. You can't make one of the surprising ones we discovered recently with 5N silica flour is the coating they put over semiconductors, and it looks like a sort of lacquer that goes over the top of a circuit board. It's silica based, and it's to stop any. It's a non-conductor between elements of a circuit board. That's a surprisingly large market and growing like crazy. But you're talking hundreds of thousands of tonnes, not millions of tonnes. But definitely value add. We are seriously looking at all sorts of different value add and further downstream processing. We're well aware of them.
Right, and you just got to work out the return on capital invested. But right now for you, it's how do we
return on capital?
It's significant, but you kind of got to walk before you can run, sort of thing. So coming back to the financing with around Arrowsmith on the capex, it's only 45 million, but still you got to get that in place. So in terms of the timing for that, sounds like you're obviously in discussions. You got non-binding term sheets on the table at the moment. When do you feel you're going to be in position to actually announce to the market what that structure looks like? Your shareholders will be going like, please do something non-dilutory. There's all sorts of structured finance out there that you can take advantage of, but will you need to come to the market and raise more equity?
We've got 10 million bucks in the bank now. We don't need to raise anything for quite a while, up until the decision to mine.
And when's that?
It's about 6 months to build the plant. There's a number of items we would have to start ordering fairly soon. Next 3 or 4 months. They're long lead items. We've identified all those, and we've got firm quotes. Yes, at some point, probably September, October, we'll need to lock away financing. And before that, we'll lock away offtake. We expect to do that over the next 2 or 3 months. And reasonable, we want to get at least 1 million tonne locked away in offtake to pull the trigger on the construction. Okay. Unfortunately, the whole timetable is very dependent on the EPA. Now, we've lodged the third and last document, which is about 1,500 pages, I think, which is the project description, the project impacts on the environment, the description of the environment, which is supported by all the studies we've undertaken. That document is in with the EPA. It's been with the EPA about 6 weeks already. It will come out from the EPA whether they require more information or not. We don't know yet. We don't think so, because I've seen this document a number of times. It will then go to a public review for 30 days. Now, subject to those, any public comments, we will. It will determine the timetable. We still think we'll get approval close to the end of this year and be able to get into construction early next year to be in production sort of mid to third quarter of next year.
Okay, so just on that sort of that timing, I get the kind of the whole EPA thing, and it's kind of quick build process. But again, just on the finance and so the type of money that you raise is really important. I mentioned there, people look and say, well, can you do this in a non-dilutory way? So offtake is one thing, because you can go and chat to debt providers and say, we've got offtake, but equity component is another, right? Do you think that you can get some prepay on this one and avoid any kind of dilution going forward? Or have you not kind of got to that point where you understand it enough?
We have talked about that with a number of the larger corporations that are involved in glass making. Generally, if we start talking offtake with 3 or 4 different companies, it makes it too complicated. And I can assure you, we've got companies that have come in and said, okay, we'll take all of your product, we'll finance it, we'll market all of your sand. Now, we don't want to do that because we understand the market. We know what's going to happen in the near future and the sort of demand. We don't want to lock away. It'll be easy to do, but I think we'll lose more opportunity that way.
Well, you lose more margin, that's for sure. Absolutely.
Yeah, margin, and I think opportunity also to deal with other companies. So we're not really. We spent some time at that in last year, but not at this point. And also we put away offtake. I don't think it'll be any problem getting debt finance for the bulk of it, and I can't see us. The long lead items, for example, we've got enough money in the bank now to whack down deposits on them. We've got to commit to, 10, 15 million bucks worth of equipment, but we can debt finance that at some point. We get offtake, I don't think it'll be a problem. We have quite a number of large funds and debt financiers who will assist there, and they're very interested. And I don't think that interest has waned at all. We're also undertaking in the moment an independent technical review. We've commissioned some consultants to do that, and that'll form the bulk of the due diligence with not banks, funds and financiers.
Right, and I don't doubt the debt component either. But like I say, it's that, okay, you got a bit of cash now to put down deposits on long lead items. Great, waiting for the EPA. It could be by the end of this year. It could go on a bit. Who knows, right? But what are the mechanisms? I'm interested in the mechanisms that will allow you to do non-dilutory financing. So prepay with 1 or 2 preferred suppliers. I get there's a queue waiting for you. There's no problem with that. But how many of them are willing to step up and do a prepay on that basis, given the fact that they can go and secure product in market in the short and medium term, and I buy your long-term prognosis. Is that a possibility can I get prepay on this? It's
a possibility. Some of the companies we're talking to can prepay what we need easily. They're multi-billion-dollar companies. It all depends how much we want to get into bed with them. It's a diverse market. It's certainly dominated by China, but it's the car manufacturing in Korea and Japan is a huge industry, and obviously the rate of growth of car manufacturing in China is going through the roof. So a lot of demand coming from there, but the market in Japan and Korea will be adequate. We can't produce enough sand that they might want. Now they can, those car manufacturers, mind you, they all use contractors to supply that glass, and it's the contractors we're talking to. They can easily finance this, but it all depends how much you want to get into bed with them. So an arm's length debt financing deal would be probably more preferable.
But are you unlikely to get 100% debt though?
Might require a component of equity as well, but it'd be minimal.
Right. Okay. Well, I'm getting to the point that I as an investor care about. It's like if you got to raise some equity, there's dilution. If it's minimal, you can say, well, in relation to the opportunity in front of us, it's de minimis. Don't worry about it. Or you say, I can get 100% debt financing, or I could get into bed, prepay with a partner which would allow us to finance or, complete the financing of the CapEx build on Arrowsmith, but for only a portion of our, 100-year life or a portion of our annual output. Do you know what I mean? You've got lots of, I guess, optionality there. So,
lots of options.
Right, okay.
Lots and lots of options. We'll investigate all of them and work out which one's the best deal for us.
Okay.
We're not set on anything at the moment.
Okay, so that in terms of the money. So now we've got to look at the share chart. Obviously, you're in that kind of awkward phase of, getting to the point where you're...
Well, as a substantial shareholder, I don't wish for dilution.
No, I know that, but I'm also I'm cool with what you said with regards to the optionality in front of you. But just looking at the sort of share chart, I mean, obviously compared to 2020, life is good. Obviously people got excited at the beginning of 2021, and it's been
last 3 months is different.
Well, last 3 months have been difficult for everyone, right? So whatever sector. So, that's all fine. But I think the big moment people are going to be waiting for is EPA approval, final EPA approval, and then announcement from you around how this thing gets financed, timing you're clear on, and who you're getting into bed with. I guess the bigger names excite people, and some of the lesser known names may not. But the point is, you feel that by 2024 you are in revenue?
Yes.
Okay. And what's that projection look like as far as you're concerned, if things go according to plan?
First 2 years, sort of 20 million Australian dollars a year, followed by the next project with its Muchea, that'll be worth about 40 million a year. So we think within 3 or 4 years, 60 to 80 million dollars a year, and that's not taking into account any escalation in the prices. And I think the escalation in prices will be much greater than our operating cost, because it's not a huge operating cost.
Well, they're kind of sunk cost by that point, one hopes.
The plant, yeah, sure. It's low maintenance, low operating cost.
Right. Okay. Well, look, Bruce, I'm just sort of cognizant of your time. I appreciate, one, the education on the market. I think that will help people understand how the market operates in broad terms, and I appreciate you kind of sharing your vision for how this company moves forward and where you are at the moment. So look, just folks, stay in touch. Exciting times, interesting market, and we wish you well, sir.